Alright, ICT traders, welcome back here. So this particular question is one of the most common questions I've seen from you guys, but on my DM and on my videos comments. Alright, so I believe a lot of you guys are trading gold, and I will take time to just do some technical analysis. This is purely technical, and then we're going to predict the direction of gold based on technical analysis. Alright, now if I tell you the specific direction of gold, then I may not be doing right to you, except if we go through these steps. All right, I'm going to show you that this thing differs from different perspectives, because you will have to factor in time frame, and then you will have to factor in so many other factors. All right, so this is gold. If I just asked you from the knowledge of your technical analysis, from the look of this on the weekly time frame, now what is the direction of gold? Obviously, any one of you will not find difficulty in telling the direction. Right here, gold is bullish. But it is bullish to who? That's the question. It is bullish, is it for you or for people trading on the weekly time frame? Now, a lot of you guys are intraday traders, so this is why you have to know how to do top-down analysis. All right, top-down analysis is your ability to now look at a bigger picture and then bring it into smaller picture. All right, bigger picture into smaller picture. So let's go into that step by step. I'm not going to check any fundamental or anything. Now, there is something I also discovered about gold. If you're doing intermarket analysis between gold, let's say XAU and DXY, now you'll realize that most of the time you trade gold against USD, right? And DXY is basically the dollar index. That is the United States dollar index, basically the indices that gives you the strength, the performance, almost everything about the United States dollar. It is ideally, we are supposed to see price like this. If DXY is bullish, we are supposed to see gold bearish. But you see how stubborn gold is? Gold does not always follow this correlation. And this is from my own research. I'm doing research still to know why. The why is the most important thing. But then I realized that most of the time, DXY does it on differently and your gold does it on differently. Sometimes they go in the same direction, and you'll be wondering what exactly is happening. I thought if we have gold going up, then we have DXY going lower, all right, or going bearish. But then this is not the case most of the time for gold. I'm not saying it doesn't correlate, it does, but then sometimes you're going to see these things happening, all right? So one of my advice for you is forget about intermarket analysis with DXY when it comes to trading gold. Just do your analysis purely on gold and let it be on gold. Your analysis technically will give you a head start to know how to trade it. All right, so this is the weekly, and one thing is that from weekly we have not seen price trading into any institutional reference point, maybe old time institutional reference point or something. No, gold has traded to its highest point in history. That's about $2,431. All right, so the last time price did anything relevant was when price had this boom break of structure. I'm starting from the weekly, please don't forget, break of structure to the upside. Now, is price going to continue going up forever? Definitely no. I know this is not something new for you. Price does not go in one direction forever. This is what some basic traders call overbought and oversold, but there is nothing like that concept in the market. What price does is that every time price move up like this, just know that the smart money are not happy. They don't like to see price going without the equivalent value going up, and that is why they call it imbalance. Imbalance is when you have a lot of fair value gap like this. It's called liquidity void in simple term. A lot of fair value gap in this movement. What exactly is a fair value gap? We call them buy side imbalance, sell side inefficiency, this particular fair value gaps. All right, so listen, look at this. We have this we have another one here, a lot of fair value gap. So this one is liquidity void. Ideally, price does not leave liquidity void without being balanced. Liquidity void is an imbalance, so price wants to balance it in the future. All right, and this is why we have the concept of premium and discount. If we pick our FIB level, put here to this place, and we expect price to do what? To come back to discount so we can take our trade. It's basically bringing in discount for us. Every businessman wants to get discounted price to buy goods so he can sell at an expensive price to make profit. The only way you can make profit is between your buying price and your selling price. All right, that is where the profit is, the difference. All right, so this is why we see if we are buying here and we are selling here, the difference is our profit. So that is why we need discount. You cannot buy here and sell here, you will not make profit. So we are seeing bullishness, but then notice what is happening. Bearishness is coming in. I am now bringing your attention closer to the things you need to pay attention to. Now, in this regard, we have break of structure to the upside. We have discount, premium. We want to see price come into where? Into discount before we can buy again. But please don't forget, this is the weekly time frame. So each of these candle is a black candle. Let's say the sell candle, rather. I'm just showing you. The color doesn't matter. It's just a depiction of psychological colors to just show you what is happening. So if we have price coming, this is like 4 weeks to this area before we buy again. So why not take advantage of this bearishness? And this is why I am bringing your attention to the concept of bullishness for who, bearishness for who. If the weekly is bullish overall, and the lower time frame I want to trade is showing me bearish, I don't care as far as I am not in the discount area where price has high potential of going up. So what I will do is to enjoy this free fall. So that means if I'm looking at it from the lower time frame, I don't care what is happening there, I want to go bearish. All right, so the start of that bearishness matters, because most of you only discover that price is bullish when it is visible to everybody, and that is not what smart money teaches you. You want to take advantage of opportunity before it is public or before it becomes visible to everybody. My mentor used to say that every time you hear about an opportunity as a common man or as an ordinary person, just know that something is fishy there. It is already too late for you. All right, it is already too late for you. So what you do is that you take advantage of the sell here before it becomes here, because by the time the sell is here, everybody knows that this is a sell. All right, notice this is where this buy started. All right, but before somebody knew that that was a buy, it was here. They began to realize that it was a buy. The same thing happening to those of you who are investing in crypto now. When Bitcoin was just $1, all right, a lot of people did not know that that was an opportunity. It is when Bitcoin became 60K, all right, that a lot of people started seeing an opportunity in it. So we want to take advantage of this. So this is where time frame comes in. All right, time frame is important. How do we do that now? Since we want to go bearish and we know that it is going to take us some time to go to the higher time frame point of interest, let's see if we can have a clearer picture. A clearer picture in the sense that the lower time frame tells you where the smallest movement start. Just like an atom. They used to call it the smallest unit or the smallest part of a matter. All right. So we want to see from the smallest part, from the micro perspective of what is happening. Because before you can have an organism, you need cells. Before you have tissue, you have organs, you have the system, and you have the entire organism. All right. So this is what we have with time frame. The time frame is behaving in fractals, small, 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 before you see the entire detail. So the smaller time frame gives you a lot more detail that you can use. So remember, I told you that before you can end an uptrend, you need a shift in market structure. And the same thing, if you want to start a downtrend, you need a shift in market structure. All right. If this is an uptrend, we need a shift in market structure to start a downtrend. So notice how price has been behaving. Up to this area. This was the only place we've seen a shift in market structure. All right. Now we are seeing from the lower unit that there is that there was a shift in market structure here. Not only did we see the weekly time frame printing the bearish candle, there is a story that started from here at this exact point on the lower time frame. So that was the shift in market structure, and this is where those who know how to take advantage of opportunity are resting. All right, so boom, are you going to start selling here? Definitely no. Is it here? Definitely no. Because why? You will be chasing price. You do your premium and discount. You are officially bearish now on gold. So what is your premium and discount telling you? I need to wait for price to come back to premium before I can sell. Is that not true? So notice what price is doing. Price is going to trade into some recent area, or let's say this area. Do we have this bullish order block? Price have traded into it just at the tip. All right, price just traded into this bullish order block, which is telling you that there is so much to learn here. So we just touched the tip of this guy, and then we have another small fair value gap there also, which is very, very important for us to take notice. So I am going to wait. I am bearish now officially, but then it is not yet time, because timing is also important. It is not yet time. Why? Because I need to wait for price to come back to premium. What now do I have in premium? I'm going to look for institutional reference point. Is this a breaker block? Yes. A bearish breaker, which price may want to go to. Beside it, a fair value gap, confluence. All right, so that is where I should expect price to go to. You can take your buy to this area before you sell, but then know that it is riskier to go bullish. So it's a function of patience and timing. All right, so we're going to wait for price to come here. Even though I don't trade gold precisely that much, I trade gold very seldomly, but then I have to show you how to go about this. So if you have this retracement into this point of interest, which is POI on the 4 hour, look for a shift in market structure again to the downside as price is going up, going up, going up, going up, going up, shifting structure, then take the sell. That will be a swing trading from that point. So what do you do now? Do you take trade? No, you wait patiently. You wait patiently. And those of you who are seeing it from 1 hour time frame, I know you are tempted to think that yes, this is a point of entry. This guy here. No, it is not point of entry, guys. Why? Because you have to identify a swing point before you make it a high. This place is not a high, this place is not a high, because we don't have the qualification for 3 candle retracement. We have 1, 2 is not up to 3, 1, 2 is not up to 3. So this entire movement is considered to be one movement. So it will become an inducement if you enter from this fair value gap. It will become an inducement if you enter from this fair value gap. By the time price starts coming back, it will clear everybody and then target this mitigation block we are seeing on the 1 hour time frame. All right, I hope you're watching this correctly, guys. If you find value in this, ensure you let me know in the comments. I will make more videos to educate you guys. See you in my next video.